and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next 20 minutes here on Options Guide TV. I'm going to put it at 20 minutes. I think that's about how long we're going to go today. So some interesting things definitely happened in McDonald's. Our trade is playing out. The market has moved to the center strike, and the unfortunate thing is that we have an entire week to expiration in that they announced on a Monday. The closest expiration date is Friday. So right now the position is down, but it's right where we'd like it to be if we were closer to the expiration date. So with that said, we'll just look at that and we'll take a peek at it. We'll let this play out for the day today. But the fact that McDonald's actually broke through a resistance level to the upside makes the underlying stock fairly interesting. Had some good comments in the conference call just about pricing and how they are dealing with inflation after COVID, and in general in the fast food space, they're just the prices increased to probably more than most sectors, and they had a lot of good things about how they managed things with their combo sales and everything that went along with it. So I want to get long McDonald's actually, and we're going to do that today just using option contracts, going a little bit deeper in the money, buying a deep in the money call option as a surrogate for owning the stock. But let's start by looking at the chart in McDonald's. All right, so we're here inside the Tradier Pro software. And by the way, if you have any questions, please do feel free to put them in the chat box. There's many different ways that you can watch Options Guide TV, but if you'd like to participate, we're using live quotes on the live show. So feel free to put those questions into the chat box. All right, here we are. Right now we have a chart of McDonald's going all the way back. So where this first peak is May of 2023. And we came up and we bumped up against the 298 level a couple of times, then sold off, came all the way back up. And this is the level that I think is the most interesting in the chart, right at the 300 level. And that was one of the reasons why we kind of looked at, obviously earnings are always going to trump anything that you're going to really see on the charts, except for this was an area of congestion. It was really hard for this underlying stock to break out through that area. And today with the solid earnings report, we saw that McDonald's has done that. So had the little blip up to the all-time high here, and then had the scare with the it wasn't the bird flu, but they had the scare with their meat having issues, and the underlying stock bounced back down. I've lost the word that I'm looking for, but that's what really brought it down in the first place. They managed that well, as McDonald's does have a solid management team, and now we're back in that level, looking to go towards that all-time high again. So if we stay, by the end of the day, if we stay above right at this level, well, this is the level here. This is where the little bit of noise to break out. But the 301, we'll call it 301.50 level right there. And as a matter of fact, let's zoom in on this. And the bodies of these candles are right at the 301.50. And that's right where we ran into a little bit of congestion there. So if we stay above that level today, which at this point in time, it's looking fairly strong that we will, then McDonald's gets real interesting on a fundamental basis and also on a chart basis. So what I'm going to do is here's our trade that we put on Friday for the Monday open. And we're centered right around the 307.50 price. And right now we're at 309.50. We have limited risk on this 310. If we finish above 310, that's kind of a scary area. That's where the risk really starts to kick in. We can close out the trade. It was at 63 cents. Now it's at 84 cents. So you have to buy to close it at 84 cents at this point in time. or you can let it run. It was very limited risk. It really would depend on the number of contracts and the risks that you'd want to take on the trade. See if we get a little bit of a move down, a little bit of time decay. But longer term, I want to get bullish on McDonald's. So we're going to do that by going further out in time. And that looks like I froze for a second here. And we're going to go deep in the money, and we're going to buy a deep in the money call option as we head into the summer months. So here, back in the business again. MCD is the symbol. And we're going to go out about, let's go out around 100 days. I like that number. Nice. We got June is 130, so that's going to be our choice here. So we're going to go with the June expiration, June 20th, 130 days out. And here's the one standard deviation move. We're highlighting the most at the money option contract, which is the 310 option contract. And we're looking at the 280 strike is trading at a 94 delta. If we go, we want to do something right around the 80 delta, if we will. And we're right in between that. We got the 77 delta on the 295 and 82 delta on the 290. Extrinsic value, you're looking at buying around $8 of extrinsic value, of time value, to go out 130 days and get an 80 delta, or you'd pay $9. So this is what I'd be focused on. We got the 77 and the 83. I kind of like, you're getting a decent amount below on the time value, extrinsic value, to go to the 83. So let's buy that option contract. An okay market, 260, 2690 by 2610. So let's buy that. Close this out down here, and 77, and there you go. So very simple paper trade to put in right now on McDonald's, liking where the stock is at. Now, I personally, if I were to enter this, I would wait till closer to the end of the day, make sure the stock did actually close above the 301.50 level, because we're still in that earnings. Still got some volatility that can happen with the underlying stock. But if we get the follow through on the breakout to the upside, I want to buy a deep in the money call option as a surrogate for owning the stock. We'll sell a call against it a little bit later at a later date, but this would be the official paper trade. And I'm going to send this to the what if calculator to start with. And then I'm going to look at a trade today. I just want to get bullish on the market. Been struggling, be blunt, I've been struggling with the earnings trades that we've done. Market has been, I don't know, 1 minute it loves AI, the next minute it doesn't love AI. If you're spending on AI, you get rewarded, and then all of a sudden, if you're spending on AI, you get beat up. And it doesn't have anything to do with the actual earnings reports. I read something that around 75% of the companies that have reported so far have beat on top line and bottom line in most cases. So the earnings reports have been good, but it's been all about what does your spend look like, and usually it's about AI. We still got a big one coming. We still have NVIDIA, February 26th, and it'll be, obviously, that will be a market driver at that point in time. But to head into that, we still have, well, this week on Thursday, because it is a Thursday, once again, because it is a Thursday, and you have a Friday option contract that has 1 day to live, I'm going to go back to the wheel and probably look at a butterfly in Coinbase. And we'll do a earnings trade on Wednesday for the Coinbase earnings on Thursday. And that's the only other real interesting stock that's in there. I see Marriott. We got Lyft that's going to be announcing earnings this week. And then we're going to start getting into some of the retail companies that will start to announce earnings. And that's usually where we finish up on the quote-unquote earnings season. All right, so let's look at the SPX. Let's just get bullish. I like the way the markets are leaning towards the upside, and I kind of feel comfortable going back to the wheel. We haven't done an SPX trade in a bit, and it's mainly just there's so much new potential news headlines with tariffs, administration, immigration, everything, that I didn't really feel comfortable getting long any particular index. A while back, we looked at doing a straddle in the Russell 2000 index, the good old IWM. Today, we're going to just get long the SPX, and I'm going to do that by selling an at-the-money option contract. So we have the 660 and the 6070, 6070. God, it's going to be hard. That was easier to say 599, right? But now it's 6070 and 6060 strike call options. That's right in the middle on our SPX trade here. So what I'm going to do is I'm going to sell. Well, we need the shorter term option contracts, actually. And then there will be one more strike that's available on the shorter term ones. So we're going to go out to the Friday expiration, which will be the 14th. And we are going to sell the 6065, and go 10 points down and buy the 6055. So we're doing this in the money. Here is the one that we're buying, and here is the one that we're selling. And if the markets go up, it's not going to be an issue. All right, come on. I'm frozen one more time again. There we go. I ended up buying 4 of them. Go figure. So we're just going to do it on a one-by-one basis as usual. You always would do your math accordingly. 620. Okay. And that's usually about right. Okay. So we're buying an in-the-money option contract. And on that in-the-money option contract, we're going to be paying $34 worth of extrinsic value. We're going to sell something that's at the money. Right now, the market's at 6,066, and we're going to sell the 6,065 option contract. That has, this is all time value. Well, actually, there's a little bit of intrinsic. So we're selling $38 worth of in extrinsic value, time value, and we're buying $34. So that gives you a decent risk reward. That means that if the market actually stays where it's at, or even drifts a little bit lower, even though we're paying a net debit for this trade, it's positive time premium erosion. It likes time premium to go away. So our break even would be this strike plus 620, and then we'll go down to 6. Let's do it 610. I wouldn't mind. It'd be fun if we could get it at 6, right? That's a simple number, but I don't think that's feasible. $6.05 would be a good fill. That would be a solid fill at the midpoint. So you take $6 plus 55, so 661.05 is where our break even point is. $6,061.05. And so if that is obviously the market is above that at this point in time, so market can stay where it's at. It can drift a little bit low, and the market can go higher over the week, and we're going to be okay on the trade. And we're risking 6 to make 10. So not a bad risk reward. The market, if we woke up and the market is down, what we'll do is we'll roll into a butterfly. It'll be a 10-point wide butterfly, and then we'll have a chip in a chair and hope that the marketplace comes back. So by Wednesday, we'll decide, did the market go down? Are we going to make the adjustment, or are we just going to ride our long call spread into the Friday expiration? And quite simply, that's what we're looking to do at this point in time. And any questions that you might have on this? We'll come back on Wednesday. We'll look at another earnings trade just because. Why not, right? It's earnings, so we'll talk about strategies around earnings. And then we'll look at this trade, see if we make an adjustment for the week, and we'll look at our McDonald's long call option. We'll let that ride for a little bit. I'm going to put that on the back burner. And we got 100 and 120 days until that expiration date. We'll probably sell some short-term calls against it. And that will be it for this edition of Options Guide TV. And we'll see you this Wednesday for the next edition of Options Guide TV. Please stop in. You can follow me on X. My handle is Brian Overby at x.com. You can follow Options Guide TV through hub.tradier.com. And you can ask questions via that platform. All you got to do is just create a free sign-on. And we'll see you this Wednesday for the next edition of Options Guide TV. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.